Good afternoon, ladies and gentlemen. Welcome to the ZOTEFOAMS post-AGM investor presentation. Throughout this recorded presentation, attendees online will be in listen-only mode. Questions are encouraged. They can be submitted at any time. Just simply type in your questions in the Q&A box on the right-hand side and press send. The company may not be in a position to answer every question it receives during today's meeting. However, the company can review all questions and any other responses will be added to the Investor Meet Company platform. Before we begin, we'd like to submit the following poll. If you could give that your kind attention, I'm sure the company will be most grateful. And I'd like to hand over to CEO David Stirling. Good afternoon.
Good afternoon, everyone. Thanks, Mark. Welcome to our AGM update in May 2023. We did release a trading update this morning. Most of the information from that trading update is contained in summary form in the presentation. So what I'd like to do is I'll present a bit of an overview, let Gary McGrath, our CFO, talk quickly about financials, and then we'll cover some of the business unit specific performance. We are talking about 4 months to end of April here, with a little bit of comment on the macroeconomic environment and the outlook, of course. And as Mark said, any questions, please type them in to the Q&A section in the chat box, and we will come back to you at the end of the presentation. So if we can move through to the second page. The business of ZOTEFOAMS, if you look across the top here, we have 2 basic technologies, autoclave technology and extrusion technology. The autoclave technology makes blocks of foam, and we think about that in 2 main ways. One, the genesis of the company in polyolefin foam, using polymers like polyethylene primarily to make premium durable foams for a huge variety of applications, mainly business to business. Our high performance products uses the same technology, the same asset base, to make foams from different polymers. And the reason we want different polymers is those polymers have different performance conditions and change the properties of the foam. So, for example, all under the ZOTEC brand, we make very lightweight foams for aviation, space, etc. From fluoropolymers, we make foams for Nike footwear, from elastomers with good energy return, and other foams such as nylons or other materials that we're looking at. All of those technologies are made using the same process equipment, so they are interchangeable in terms of capacity. Not 100%, but for the purposes of these presentations, it's best to think of that. And so, as our high performance products portfolio grows, we can mix and enrich our business over time, and those give us a higher selling price per unit of capacity, higher margins, and the ability to grow our business more quickly. Our polyolefin business, really we are operating substantially in established markets with a very fragmented, diversified customer base. In high performance products, we are creating markets or disrupting markets, and the opportunities are large. We're not looking at market share, we're looking at disruptive technologies, and we have proven we can do that, with example with Nike in footwear, where we provide the foams for very high-end running shoes. Also within our high performance products business, we have technical insulation, branded T-FIT, and mainly that's aimed at the food, drink, biopharma, semicon markets in clean and semi-clean room type processing. Those products are made from our own high performance foams, and the reason that we have gone into that market, again, it's a very disruptive technology, but realistically, that is a huge market. We're operating right at the top, at the pinnacle of performance, and that's a very good use of our capacity. The other part of our business we think about is extrusion technology, or MuCell. What we're doing there is taking polymers which are extruded typically into very thin sections, injecting gas and changing the amount of polymer used or the physical properties. So an obvious use of that technology is to use less plastic because you're injecting gas and displacing the plastic in common packaging like yogurt pots or bottles, etc. And we sell the technology, or we license the technology for other plastic producers to do that. We have also used that technology to change the properties of some of the plastics. In the specific case I'm talking about is Resource, which is a development of a barrier properties in plastic created using a layer structure of solid and foamed plastic films. And by doing this, we've created a technology that can be used to displace existing barrier packaging. The most common, the easiest one to understand and where we're focusing is on cartons for packaging, for example, of apple juice or orange juice. The biggest player in the market is Tetra Pak. Hundreds of billions of cartons are made every year with a relatively small number of suppliers. And those cartons are made from a combination of called liquid paperboard, made a combination of card, plastic, and usually aluminium to provide the barrier and water repelling properties. Those three elements together give us a package which is known as a composite package, which is very difficult to recycle and doesn't use recycled content. It's all virgin content. Our technology can be completely recycled, a bit like a milk carton, just throw it in the common recycling stream. And we use, at this point, at least 30% recycled content in the manufacture of a new carton. So the autoclave technology business is growing, is profitable. We'll talk about that in the next slide. The Resource part, particularly MuCell, is a development project. It's very high potential, but also higher risk, and we will talk about how we are investing and how we see the development timescales and development approach in that business. So that's our business overview. At this point, what I will do is I'll pass over to Gary to cover some specific elements of the first 4 months and look forward, and then I'll talk a bit more about the business units themselves.
Thanks, David. So you can see on this slide, headlines for the 4 months to April, see our group sales up 15%, and our two primary business units, polyolefin sales, or the AZOTE brand, up 14%, and HPP sales, which combines our footwear and our aviation and our T-FIT subcomponents, up 19%. Don't show MuCell here. MuCell for last year, for the full year, was about 2 to 3% of revenue. It's historically a bigger seller in the second half of the year, and so it's actually very immaterial with little movement in the first 4 months, so relevant for this performance update. So what you can see is continued year-on-year growth in revenue, and very importantly, an improved cost environment. My second slide will go a little bit deeper into the key components of that, which are primarily our LDPE resin for the polyolefin business and our energy. So I won't touch upon that yet now. I'll do that in a second. But in addition to that, what we've also got is operational efficiencies as we continue to eke out improvements, be that improving our energy efficiency, which is obviously both important from an ESG as well as a cost perspective. Optimizing, certainly we've talked in the past about our US plant and about optimizing that and improving certain yields and so on, and we're certainly making great progress there. And just optimizing our entire supply chain. We have, as you know, if you follow us, taken some significant price actions in the past 2 years, particularly last year. We put through 3, one of which was a surcharge, and we're seeing the benefits of that in these first 4 months of the year, coupled with on a year-to-year basis the stronger dollar. I think probably around this time last year, we were probably looking at an average of around 135 to the pound, and this period is more around the 120, 123. We saw that benefit in the second half of last year, and so the period to period to April benefits, but as we move through the rest of the year, that will balance back out, because the year-on-year comparative in the second half will be limited, if not actually a headwind that we're forecasting. So on top of that, phasing benefits in terms of performance, we're not presenting the profit, but we're certainly seeing a better, a strong underlying profit, and that is supported by SG&A actually going up year on year, but in terms of our own internal planning, somewhat lagging, but much of which we expect to pick up as we continue to invest in growth going forward. And then finally, we were very pleased with the end of last year's leverage position and borrowings position. If you recall, we were at 1.2. We'd come down from just over 2 at the end of 2021, and we continue to see that stabilize strokes somewhat improve, and we're looking at a 1.1x on a trailing 12-month basis. So comfortable with very effective cash generation, continued cash generation, and that we expect that to remain around that level. As I said, just wanted to make a couple of points on the key cost elements, and those of you who have attended this the last 2-3 times have seen this chart before, but it still remains important to show where we've come from in LDPE, which is a significant cost component of our business, and particularly of the polyolefins business and the margins that we achieve. And if you recall, what you see there is the top line in orange. That is the price that we've been paying for LDPE. In my first 4 or 5 years here, I joined at the end of 15. I experienced a pretty stable LDPE environment. That changed drastically around September 2020, and indeed it went from around an 800 euro per ton price to a 2,300 price by middle of June last year. That has come down, as you can see, and we're now around the 1,500, and you can see we've been there for most of the quarter. So certainly stabilizing. It's higher than the historical average based on this chart, but it's stabilized. The important thing as well is to understand just what some of the drivers of that were. You can see that how that orange widens. That's the profit that's taken by the manufacturers. That's what the blue line represents, the actual spread, the margin of the supplier. And you can see that really did spike during COVID. We're very we know that really is related to the availability of export. The ability of imported product, rather, the inability to bring product in and stabilize the market led to the opportunity for the manufacturers to take higher profits. That's come down, and it seems to have stabilized, as you can see, at a much lower level. So summary, where it's down, it's stable, and that's certainly helping us as we go forward. That does have an impact on the surcharge element of our pricing, and David will make a comment on that as we summarising what we've said in the trading statement. The other main area is energy. We have the 3 main sites in the UK, US, and Poland, and some three-quarters of that cost is in the UK, where we have seen obviously volatility and an increase in costs, but we've certainly seen that pressure reside over the last few months. We're at lower levels than we were, although it still remains somewhat volatile. We are buying ahead. We didn't do much of that last year because of the delta between spot and forward. We are buying ahead, but there's still risk there, and there's still a difference between buying now and buying forwards to the negative. So we're observing that as we go. And it really is the UK that's the primary plant impacted there. And then just finally, foreign exchange is a big issue for us. It was a decent component of some of the growth last year. in the 22 results. We are seeing, we are long on the dollar. We're pretty much hedged in euro. Almost all of the raw material we bring into Europe, into the Croydon plant, is euro denominated, and all of our sales into mainland Europe are priced in euros. That generally seems to be a natural hedge. We're long in the dollar. We sell almost all of our HPP in dollar, and we have the US business, and we buy more in euro, as I mentioned. So that's the more critical. That's very stable through this year, and as we've said in the trading statement, if the prices remain the same as they are, if the rate stays as it is today, we kind of anticipate full year there being an immaterial movement from currency. That's it. With that, I'll pass over to David for the rest.
All right. Thank you, Gary. So progress today, I think, just in summary, before we hit the detail, polyolefin foams, we have seen a sort of good recovery in margins because prices have held up and costs have come down. We have got structural growth prospects. I think we are looking at a European market, for Germany in particular, is not so strong industrially, but right now in this particular period, but we have got structural growth prospects right across the polyolefin business. We see that, and we have got capacity to deliver that. In high performance products, we see further growth opportunities in footwear. We are exclusive with Nike, substantially track running, moving into trail running recently, and moving into basketball in the upcoming seasons. So our T-FIT insulation products are well positioned for growth. There's a huge amount of building of new facilities of the biotech, pharma, and food and dairy, particularly in areas like India, China, where we're located, as well as Europe and North America, particularly as people try to insulate supply chains from disruption on silicon chips, etc. And in MuCell, there's definitely a big opportunity to disrupt the packaging market and cartons in particular. And I will remind you that everything we do, we have one eye on sustainability. MuCell is specifically designed to offer lower carbon footprint solutions. We are 50% of the carbon footprint approximately, and significantly lower water consumption and energy consumption than manufacturing a liquid paperboard carton, which may surprise some people, but there you go. It's been externally verified. And most of our polyolefin business is either designed to lightweight or insulate or use less material or protect goods that have high value and high carbon footprint themselves, improve their longevity. So I think we are a business that really focuses on, as our purpose really is to find the optimal material for the benefit of society. And when we develop new products, when we think about the areas of business that we're going into, that's certainly something we judge ourselves by and make the decision based on that as a factor. If we go into the next slide, talk in detail about polyolefin foams in the 4-month period, we have got a 14% increase in revenue. Volumes are down a little bit. We've seen good growth in North America, but continental Europe, as I said, Germany in particular, a bit more volatile, a bit more uncertain, and lack of commitment. And that's sentiment driven, as well as underlying economics. But we continue to push forward in areas where the business is doing well, or the markets are doing well. We have got, as Gary said, higher average prices than at this point last year, as the price increases that we have put through over the past 12 months have stabilised. We have got slightly favourable exchange rates. Doesn't make that much of a difference in the azote business, but somewhat, and a favourable product mix. So, and as Gary said, the price of polymer has come down, energy has come down. So those are really business unit specific to azote. And as those costs have come down and our prices have stayed stable, we have seen that widening of margins. We haven't put prices up in this period. And in fact, we are currently discussing with most of our customers what the right prices are going forward, because the last price increase in many of our markets was a surcharge, and that surcharge was based on high energy and high polymer prices. And so we are looking at getting the right price for certain products in certain markets, or in some cases the right product, because we believe that some rebalancing of our product portfolio will benefit everyone, ourselves and our customers. So that's something that's really the heavy activity from that segment today. If we look at our high performance products, 19% sales increase. Footwear sales are up 12% with an increase in volume, and also on top of that, higher average selling prices, dollar related, but with a little bit on product mix. So very, very strong performance from footwear in the period. I will say before I go on to the next two things that we are only talking about a 4-month period here. So those very good results in footwear, very pleased with that, good start to the year, but they are somewhat being measured over a short time period compared to last year. And the same is true for the PVDF, ZOTEC F and TFIT, where with ZOTEC F, the underlying demand is definitely improved. We sell most of that portfolio into aviation, a lot of it into Boeing, and increasingly of interest to Airbus and some other platforms. And so the underlying demand environment definitely improving, but in the period, just really due to timing of deliveries, etc., the sales to that particular product group down 13%. Not something that we are expecting to continue at all. In fact, we've pegged in good growth of that business over the coming years. TFIT insulation, again, similar kind of story, relatively flat to last year, but expecting the growth to come later in the year. So, and again, it's repeating what Gary said, most of the high performance products sold in US dollars, so a bit of a tailwind in the first 4 months on the dollar. So basically, I would say overall, good start, but in line with our expectations. And then if we move on to MuCell, really this is a story about resource, because we have substantially redeployed the team over to the development of resource. This slide really gives you just the positioning. It's, as I said, a much lower carbon footprint, which is global warming potential here. We take a fifth of the energy and about a tenth of the water. So it's a very favourable product, and it's circular, 100% recyclable in existing streams. And the key to this success, I think, is that we have designed something that can be used by existing beverage carton users, packers, retailers, etc., on existing equipment. So we're not asking for a big shift in the infrastructure costs or the approach of the industry here to adopt this packing solution. How much progress are we making? I think it's pretty good. We've developed, if you look on the bottom left-hand side of this, our Massachusetts pilot line, you can see it looks like a sort of untidy lab, which these things often do. and that's where we've developed the products and refined the formulations. And on the right-hand side, you'll see something looking a lot more like a full-scale production line, because it is in Denmark. It's not quite full scale, but it's sort of 2/3 scale, able to make up to about 70 million cartons a year, something of that order, if it was running. And we successfully transitioned the formulations from Massachusetts over to Denmark in preparation for commercial trials. We have got partners lined up for commercial trials, and we have a very clear strategy of going to market on that. I'll just sort of pre-answer one of the pre-submitted questions, which is that as this is a development program, we are engaged with lots of people commercially who are interested, retailers, brands, etc. But everyone is really asking the same questions and looking for proof of the pudding. And so what we are not trying to do is work with many partners to do many trials. We're working with a very limited number of partners to do trials which would be representative for everyone. And that allows us really to go deep with a few people, and then, you know, with the lessons learned from that, with the successes, then we can go to market. So I think when people are saying, oh, how many partners are you working with? We've got the potential to be working with 20, 30 different brands and retailers quite easily, but it doesn't actually help us. So we have very nicely said to them, look, we'll keep you informed. We're very interested in working with you, and you know, we're going to do the heavy lifting with other people and come back to you. And I think that's very clearly what we are doing our approach. So stepping just finally into the outlook, you know, what do we see? We see further growth. High performance products should become an increasing part of the sales portfolio, but there is good opportunities across all product groups in there. The polyolefin market, as I said, more diversified, more widely spread, a bit more reliant on market conditions. And North America, those are pretty good. In UK, they're not too bad at all. In continental Europe in general, not too bad, with the current exception of Germany. But I think we see some challenging conditions, but very confident in our portfolio overall. We are spending money. We are investing in the business, not just in resource, but in development of other materials. We previously talked about polyolefin foams with 30% recycled content, new products, new, you know, investing in our facilities to reduce our operating costs, reduce energy reliance, etc., become more efficient, reduce waste. All of these things that you'd expect are kind of going on. You know, for full year, as Gary said, foreign exchange rates should level out, so no major impact from currency on the full year profit. And you know, it's early in the year. We are saying that we are happy with the market forecasts, which are in the trading statement. And so those, you know, I'll just give you the numbers there. We're looking at revenue as a market consensus of 135 million, an adjusted profit before tax of 12.6, and that would be after all of the investment in resource. Okay, so it's early in the year. There's still a bit of volatility around, but sitting here in towards the end of May in a fairly confident position about the year as a whole. And then finally, you're probably wondering who's this person sitting next to me, and she just popped up. So Lynn Drummond is our new, as of about 4 hours ago, chair, succeeding Steve Good, who stepped down at the conclusion of the AGM. And Lynn has been on the board since January, and you can see our bio in front of you. And if you want to just say hello to people out there in IMC land.
Hi, everyone. Really nice to be with you today, and look forward to hearing more from you in the course of the next few years.
All right, so this ends the formal presentation. What I will do is I'll go to the chat box and see what questions we have.
That's great. David, let me just give you a couple of seconds just to review some of those, because you've had a considerable number of questions. You might want to pick through those. But ladies and gentlemen, thank you very much indeed for your engagement this afternoon. If I could ask you to continue submitting your questions, just using the Q&A tab on the right-hand corner of your screen. But just remind you that recording this presentation, along with a copy of the slides and the published Q&A, will be available via your Investor Meet Company dashboard. David, I've given you no time at all, hopefully a time to look at one question, but perhaps if I may ask you to read out those questions, and then I'll pick up from you at the end.
All right. The first question is regarding how many partners assessing resource. I think I've covered that. Second question is, considering the investment made in resource, what timelines are the board working to secure a partner? We're working on two fronts, actually. One is the partners for commercial development, retailers, brands, packaging companies in the middle, and other manufacturing partners. And that's something that, we will need to make our Denmark facility food safe. We need to, do internal trials and then move to external trials. I would think realistically external in-market trials are first quarter next year. And in parallel with that, we are talking to potential strategic investors who may want to be on that journey with us, and that would allow us to potentially accelerate or widen our development and change the risk profile for ZOTEFOAMS. So none of those we've made any announcements about in detail. Obviously, if we get to the point where those are signed deals or concluded agreements, then it would be price sensitive, and we would let people know immediately, but nothing to announce at this point. Third question, can you please describe how you see your competitor landscape and your moat against them? So competitor landscape, what I would say is that our polyolefin business tends to be regional, so those products don't travel too well. Most of our business is in North America or Europe, and the competitive landscape is much as it was over the last 5 or 10 years. People come and go a little bit, but I don't see anything different there. With our high performance products, we're looking a bit more widely about what people are doing globally with foaming technologies, etc. And as with any industry, you see things that interest you. What are they doing? But no one has come out with anything that we don't understand or don't see, and certainly not in any meaningful capacity investment way. However, that could change tomorrow, so we're not sanguine about that, and we are ourselves looking both to figure out how to best use our technology, make different products, new advances, etc., and how to augment or upgrade our own foaming capability to improve either the performance or the economics. So it's I think a response that you might expect from any sensible manufacturing company that's looking at a global basis. So next question from Thomas H. Please, can you give any sense of scale of the commitment that you're looking for your potential partner and resource? I'm afraid I can't. No. I think at this point we're looking for someone with ideally packaging experience, high volume packaging supplier with the financial wherewithal to invest, to scale. If someone comes along with the money and not the wherewithal, I think we've got a very competent team, because we've picked people from the industry to get where we are, including ex Tetra Pak commercial directors and ex engineers from the industry, as well as compliance and food safe experts, etc. So we've built a team with competence, but I think it also depends what the scope of that investment is, because the resource technology can be used for a number of different things, like cartons and pouches, sachets, toothpaste tubes. We can't do everything at once, so we've decided to focus. And then there's a geographical component. Is someone interested in just Western Europe, or just South America, or just Asia, or just Japan? So we are open to slice and dice and discuss this in different ways. But I think what I said earlier about it's helpful for us to have done the in-market trials and know where we are. As we pass those milestones, you potentially hit quite high value inflection points. So a business that says it can do these things is worth less than a business that has done these things. And we certainly have an intent, a plan to get to we have done these things under our own steam. We don't at this point have any commitment or decision on scaling up by ourselves. So that's something that will emerge over the course of a successful development. And if the development is unsuccessful, we may we wouldn't do that. So it's something that we are constantly evaluating. But at this stage, we have a clear go-to-market test plan, and are making successful progress at all fronts at this point. So I hope that's not too evasive at all. And next question from Sam E. How far away are you from commercializing resource? And what potential revenue contribution could it generate? Well, I think we've quoted in the past something like a 0.3% market share is a business that is as big as ZOTEFOAMS today. So a lot depends on how the market likes it. If it was a product, or if it is a product that the market likes, I personally would find it very, very difficult to believe that it would be not many times the size of ZOTEFOAMS. Usually you don't get niche products having a 0.0 or 0.3% market share. That's not how it works. It'll either be quite a bit bigger than that, or it won't work at all. But there are differences by market, by geography. Different retailers have got different perspectives on how they see ESG. So it may be that the market is more niche or more fragmented than we think, because we know it's certainly not homogenous, and there may be, it may end up being a niche. But as I said, even 0.3% is a very significant business. So hopefully that is helpful. Okay, next question from Ed. With volumes of 5%, when do you cut prices to stem this off? Are the competition's volumes off a similar amount? Well, I don't know specifically about the competition's volumes. Most of those are private companies, and we don't talk to them about commercial matters. It's that simple. If I was to look at what I believe the market is doing in various areas and our share, I don't think we're losing share generally, but it's something we need to be very aware of to get the prices right. And as I said earlier, it's the focus of the polyolefin commercial team today is all about getting the right product at the right price to the customer. And we are, in some cases, looking to reduce our prices to customers or sell them different foams at a cheaper price to get that right, because we put prices up when our costs went up, and as costs come down, we recognise that competitors' behaviour would change. They'll bring the prices down. I have no doubt. And we hear talk of that at the moment. We see precious little evidence of it, but it's difficult to get competitive prices oftentimes, and your customers, bless them, quite often tell you the competitors are offering better prices than you. So it is something that's front and centre of mind at the moment. But I think primarily that 5% is due to a market dynamic rather than a ZOTEFOAMS specific commercial dynamic at the moment. Okay, next question from Sam. Given the strong performance, diversity of revenue, and unique IP, you're being very nice to us, Sam. Does the current market cap give the company cause for the board concern, private equity, corporate interest, etc.? I think every member of the board would like the market cap to be higher. We continue to engage with our brokers and financial PR people to understand, what is driving the shareholder interest, the market cap, what can we do about it, what can we communicate better, etc. But I think there's a significant down rating of UK small caps generally, and manufacturing possibly even a little bit more. So we're in a pack. There's lots of commentary about private equity and raiders and all sorts of things, but not something that we have thoughts about what we do in these cases if someone came knocking on the door. But as and until someone comes knocking on the door, it's quite simply we get on with running the business. And we're certainly not putting ourselves out there. So I think thanks for saying all the nice things, and we will just get on with running the business. Next question from Ed. Given the positive noises around aviation and forward orders, how much of a lag will this have to your order book? We certainly see Boeing and Airbus having a huge order book. One of the challenges they both face is increasing the build rates per month, because although we are ready to go, they can have as much foam as they want, the planes aren't built entirely out of foam. So those other parts need to come together. Some of the other suppliers are not ready to ramp up in the same way. And, Boeing is moving, and I think we see very positive momentum through the second half this year and into 2024 and 25. We're getting all the right signals, and it's not just more planes. We're looking at more content per plane, and we're looking at different, potentially getting on different platforms. So it's feeling positive. I think if we look back a few years, we did well over 10 million in aviation. Last year it was about 6, wasn't it, Gary? So
yeah, 6.5.
Yeah, 6.5. So we're still well below the peak, and that's a very good profitable product range for us. So that's something that we expect good momentum from going forward. Next question is from Andrew R. which is you talk about significant further spend and resource. What level of spend do you envisage? Well, I think the broker's view on that is, Gary, if you've got a...
Well, certainly in terms of the operating cost impact, they're looking at pretty much a continuation of last year. If you recall, we were around about a 2 million loss on new sale last year, and very much, you know, that's pretty much what that's been driven by resource, and the expectation is for this year we're in the same range. We also mentioned in the annual report that on top of that there was about 2 million in capex, and the view is it's probably similar as well. So for this year, it's pretty much a repeat of last.
Yeah. Okay. The next question is from Quentin. You mentioned Tetra Pak as the main manufacturer of cartons that your resource product would aim to replace. Is there any danger that they might look to act to neutralise the threat, and what form of action do you think that might take? I think what you're asking is what happens if you poke the bear. Generally, you get a reaction. I think it's probably a bit early, I think, for Tetra Pak or any of the other competitors to specifically react. But you know, they've got a huge amount of marketing, publicity, lobbying around you know, the benefits of cartons or the benefits of liquid paperboard, etc. I don't see that being any different or any differently skewed because we're around. It's quite simple. Their products are good and everyone else's products are bad. That's what they're trying to persuade the world. I think if we look at the way EU regulation is shaping up, it's going to be more difficult for them to continue that. I don't see, you know, we have patents on our products. You know, we have a plan to go to market. You know, the competitor's always going to make it difficult for you. They're trying to price you out. They will offer customers incentives not to work with you. They will, you know, do other things that, depending on their level of control or whatever of the market. But you know, realistically, the customers we have talked to want an alternative, and if Tetra Pak don't offer them the alternative, they will go where they need to go to get a lower carbon or completely recyclable, or preferentially a product that uses recycled content. We offer those, you know, and ultimately we are a small company. Tetra Pak could buy the technology and not blink, you know, if we were to sell it. But that's up to them. So I think all we are doing is getting on and, you know, delivering to the market what we have been told very, very clearly the market wants. So again, Quentin, talk of a slowdown in consumer spending in the US. To what extent are you exposed to that? I am not really concerned about that at all. I think we have such a strong demand profile in the US that, you know, even if that comes off a little bit, we'll still be doing very well there. So, and you know, most of our business ultimately is B2B. I know that ends up in consumer spending, but you know, unless it was an outright, you know, 2008 type situation, I think a little bit coming off the top in consumer spending is not going to impact us significantly at all. Michael D. Nike has significant sales in basketball footwear. Do you have any sales in this range currently? and any visibility of the potential of your involvement if you're able to disclose. Well, we have said that we are working with Nike in ranges outside footwear, outside running, sorry, running footwear, and basketball is the primary one. We are potentially, or we do expect sales towards the back end of this year in basketball. It's not immaterial. It's a decent amount of potential. It won't be something which really shows significantly this year, but I think basketball is a very big category, and this is our first foray into that. So let's see how it goes, and ultimately, the performance of those shoes and the sell-through of those shoes will determine how far we go and how quickly we go in that category, or whether we remain in it at all. So it's good to get trial. It's good to get on it. You'll be able to buy your basketball shoes in the shops, and when Nike have released the models, we will let you know what they are, so you can contribute to our success by buying your 16-year-old kid a pair. Scott, have you any idea of the size of basketball market opportunity versus trail running? Well, against running generally, we think the basketball market, well, we know Nike sales. We know how many shoes they sell in each category. We're very close to them. It is a potentially significant opportunity, but not as big as running in general. I think you mean running category in general rather than trail. But it's too early to tell. It really depends on the sell-through, as I say. So I can speculate on that, given my personal kind of opinions, and those are formed with some knowledge. But I would rather just let it, give us another 6 months or 9 months before we can answer that question properly. Okay, Scott M, what's current Poland utilisation? About just over 50%, something like that. Gary, here's one for you. Can you give your best guess on energy costs this year?
If I knew exactly what the price would be, I'd be speculating and I wouldn't be working here, right? But we announced back in March that the energy costs for 22 had gone up to 7.3 million. And I'm talking about gas, electricity, and nitrogen, which is an important component of our cost base. And that was up from about 5.8 million the year before. So 7.3 last year, with a run rate probably going, trending upwards. We said it's stabilised and started to come down. But if you took that 7.3, we haven't posted any numbers, but you probably took another 10% or 10-15% on top. You probably is where my head is, where we're going for this year. So again, not a significantly material movement for the group. It's still not the most significant part of the cost base, the raw material base, both in AZO and in our HPP is a far greater component. It's probably more in line with our people costs. People costs clearly are also on the way up, as everyone would know. But yeah, I'm thinking around 10-15%, subject to whatever happens in the macroeconomic environment, right? Geopolitical world.
Yeah. Okay. Next question. From Ed T, how many ESG SDR 8 funds are on the share register? And if not many, surely this needs some focus from your broker, given your strong credentials here. I think quite simply, ESG funds are the fastest growing part of the market, and there are more and more of them all the time, and quite a lot of small cap funds are rewrapping themselves as ESG funds. So I couldn't answer the number specifically, but we are, we had a conversation with a broker very recently exactly on this topic. To make sure we've got the appropriate level of focus in here, because we do think it is an area where we've got a clear message for this investor group. So next question from Scott M. How much management time attention is resource taking up? A decent amount, actually, for me. You know, a bit less recently because we have a very clear direction and it's about execution rather than what direction to take, if that makes sense. But I'd say over the last 6 months, it's probably been, if I was to think of the different business units, AZOTE, footwear, TFIT, other HPP, I'd say resource has been the number one focus for me. I think for the rest of the exec team, not so much. You know, we've got a business unit director for each of those individually, and in fact, for AZOTE, we've got one in the US and one in Europe, business unit directors. So I think it's appropriate given the amount of you know, money we're putting in there. But you know, I don't think anyone feels less of my gaze on the back of their head because I've been doing spending more time on resource. So they're still getting plenty of my time and attention. And I think for Gary, it's probably
as a board member that there's relevance. Again, yeah, it's very separate. I have a separate finance member who supports the unit, and I play an oversight role together, you know, more than the non-execs, but less than David. So it's certainly getting the attention it requires, but it's certainly not diverting attention away from other parts of the organisation.
Okay. Couple more we've got one from Ed. Have you considered longer term PPA agreements on electricity to give you better visibility? Well, we always look at energy hedging, and we've got people we work with to do that, both on the gas and the electric side. The problem with hedging is when there's a lot of uncertainty in the picture, the forward hedging rates go up hugely. No one wants to sell you electricity in 12 months' time at, you know, today's price plus a little bit. They always double it or treble it, and the rates have been so far out of whack that it's just not been worth hedging. We've actually started to hedge a bit more over the last couple of months on gas and electric. So we have a bit more coverage now than we had. That spread between the spot rate, today rate, and the forward rate is definitely tighter. So it makes sense to buy in some coverage, but we're still, you know, we're still not at the levels of normalized kind of rolling hedging that you might do in currency or something like that. You know, the market has not had the capacity, the liquidity, the risk appetite to offer forward markets on energy at sensible spreads. So I think that answers that. And then I think this might be our last question. So one for Lynn. What will you uniquely contribute to the board?
Hi, Scott. I would love to think I was unique, and it's very kind of you to suggest I might be, but I'm absolutely not unique. I have a range of experiences, both from a scientific career, so I'm comfortable, I guess, in the space that ZOTEFOAM works, and I've spent the last couple of months with the business, with Gary and David and the team, learning as much as I can before I stepped into Steve's shoes. The range of experiences I think that I'll bring is my experiences in bigger companies, the challenges that brings as you grow rapidly. But a really big part of what I want to do is to support David, Gary, and the team as they move forward with the many opportunities that I see as I've gone around the business, and how we focus down and grow the business for the benefit of the shareholders and for the ESG points that David and Gary have articulated. There's lots to do in the business, and I'm really delighted to be joining at a time where there's real opportunity, real challenge, and some really exciting projects to deliver and get across the line.
Well, that's great. Lynn, Gary, David, thank you very much indeed. You've taken every question from investors this afternoon, so thank you once again to everybody for their engagement. David, Gary, Lynn, I know investor feedback will be important to you. We'll shortly direct those on the call to give you their thoughts and expectations. But perhaps, David, back to you for some final words just to wrap up with, and then I'll send investors to give you their feedback.
All right, thank you, Mark. So appreciate everyone's time on this call. You will have noted probably that we put out a rather more detailed trading update this morning than normally AGM. That was to facilitate, ability to talk about things on this platform. We really value the direct feedback or direct contact with individual investors or smaller brokers. So thanks for the questions, and absolutely feedback very welcome. We do listen and read all of it. So thanks again for your time, and see you soon, I hope.
That's great. David, Lynn, Gary, thank you once again for your time this afternoon. Can I please ask investors on the call not to close this session, as we'll now automatically redirect investors for the opportunity to provide your feedback in order that the board can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ZOTEFOAMS PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.